what strategy might be best where you live, or what strategies may be best or fit in better where you live. And we're going to talk about those things and give you some key points of what to look for to help you determine, how to kind of forecast, what we always say, you got to look at the history in order to, predict what's going to happen in the future. So we're going to get right into it. Again, thank you guys for joining us. It's going to be extremely educational. We're not promoting, selling anything, obviously, like that. I know we have a lot of our REI Pro members on today. Thank you for joining us. Let's get going. Just some random expert market predictions. And this is just kind of an overall picture that I want to give you guys and just maybe make a few points on each one of these. The very first one is 2022 is predicted to have the second highest home sales in the last 15 years, last year being number one. Now, if we went back to 2020 was actually the highest. And then we just made a tremendous leap in 2021 as far as how many homes were sold in the United States. And now we're going into another year where a lot of people were thinking, Bo, that if we had such a huge year, how could we have another gain?
And how can it just keep going up and up and up?
Yeah, because eventually, real estate is, I always say real estate's like a wave. So when I started part-time in 1998, full-time in 1999, there's these waves in real estate. And, even if you go back to like 2010, 2011, man, people were just jumping back into it. We're coming pretty much out of that foreclosure piece that we went through, and people started buying. Well, if you were to invest the last 2020, 2021, I mean, you would have made a killing if you would have hold on to those properties. So, and of course have sold them. We're still going to see an increase, but there's going to be some slight changes this year that people are predicting. And those are the changes that I want to share with you. Predicted home values to increase 11%. There's some reasons for this. Now, I want to give you 2021 prediction. Before 2021 started, they predicted 19.5% increase. We're going to talk about what some of those actual numbers are here in just a minute, but that was the prediction. So just keep in mind when you predict something, it could be less, it could be a little bit more, but still showing another increase is huge. And this is big we're talking the last 15 years now. Okay, so that's, I've been in it the last 15 years, but we've never seen numbers like this. Inventory, this is, to me, pretty important. Inventory is predicted to increase over the next several months. This is going to be due to new construction. And I want you to think about all those owners that have been dealing with that forbearance problem. Okay. They're tired of it. It's like, I don't even want to be in this business anymore. And that's where you're going to start to see some motivated sellers come in and say they want to unload those particular properties. And especially, it's a great time for them because of some of what market conditions are doing here. Now, of course, we still need to get a good deal. And this may favor some other more creative financing strategies for particular owners like this. But just keep that in mind that we are so underdeveloped in the housing market. Younger people, with all of COVID that happened now, hey, if I can work at home, I can pretty much live wherever I want. And it's enabling them to actually buy homes. This may be their first home. They're young buyers. And this is a huge marketplace, and why you're seeing a lot of low inventory levels. Some areas, I know the areas where Bo and I live, they are building properties and apartment buildings left and right all over the place. It's been crazy because of the underdeveloped construction over the last several years. And it's just not meeting the demand. Now, if you're a seller, that's great, because if there's low inventory, right, that demand is going to go up, and so is your property value and so forth. But as these properties, start to be built, which we're already seeing a lot of this, the inventory is going to start to open up a little bit more. Now, if people are starting to buy these new properties, then you have all these sellers over here with the existing properties. Maybe those prices start to come down, the motivation tends to go up, but still we're going to be seeing predicted here 11% increase, which is phenomenal, being in real estate. All right, so interest rates expected. Everybody's been hearing this. Again, there's no solid number on this because interest rates do fluctuate throughout the year. So expected to average out is what they're predicting at 3.6 by the end of the year. Now, if we're right around that 3.3 number, and again, this can fluctuate, keep that in mind. We're not really taking a large jump, but what it's doing is scaring the marketplace. And they're coming and saying, oh my gosh, we're going to buy, refinance, refinance, because people think, oh my gosh, the interest rates are just going to go through the roof, which is going to prevent a lot of people. But the majority of people, the middle class side of it, is not going to be that much impacted by that. What's going to really make it more impactful would be the inflation side of it, right? So not only you're going to spend a little bit more for the property, now you have this inflation side of it over here. And that's where it could cut people out and say, I think I'm going to rent this year. And that's why we're seeing tons of apartment buildings being built right now. I'm not sure about your particular area. All I can do is speak for our area, but it's kind of crazy how many places are being built up right now. Now, I do want you to understand, though, these interest rates, even at the 3.6, is still one of the lowest recorded interest rates in 30 years. It's crazy. Don't listen to the news too much of, oh my gosh, interest rates are going up and the general market freaks out. I'm going to buy. Look, we're not going to go up to an 18% interest like we did in the 80s.
In the
Okay.
80s.
So it's going to spike a little bit. And that's just part of the process. Through that spike, it would cut down because mentally people say, oh, I don't want to spend more money. I'm not going to buy. That will help cut down a little bit of the inflation and so on. Demand is still going to be high because of years of underbuilding. This is a big one. And underbuilding is because of my point of view is because of COVID. We had a worldwide pandemic. And now people are working at home. They don't have to get in the car, necessarily drive down the street to go to work. And again, keep in mind, we're going to talk about this at the end, but to me, this is really the key to real estate. It's always been the key for me. It's really about situations. We're going to talk about these situations here at the end and how that really does make our business what it is. Pulled South Carolina, if you look at the bottom right of your screen, if you have rental property, in this particular dark purple areas of the U.S., you're seeing a big spike in change, and that's also going to continue this year. And this has to continue due to the fact that we are underdeveloped. We have more people buying and less inventory and so forth. Just wanted to share with you the largest increased cities. Now, this would be between 2020, 2021 here. Gilbert, Arizona had a 108% increase in rents. So you could kind of see, where these particular cities, again, just I think it's top 10. And then the top worst cities, you can see here, Toledo, Ohio dropped 27.6. Again, this is just going to be across the board in these particular areas, maybe not necessarily your specific neighborhood. Here's what I want to do, because to me, when we start looking at the future, I need to know what happened, not necessarily, knowing what happened last year is always good, but what has happened in the last 3 months? I want to look at December, January, February, because Bo, in general, this is the slowest time for any year for home sales.
Yep.
It's generally people are not buying. It's, spring is that buying season for people. Now, from an investor standpoint, we invest throughout the year. We don't, it's not like a NFL team where we have a season and then we're off, and then we come back onto the season. Our season is all year long. But we're just curious to see what were the top 3 states with home sales. Coming in at number 3 was state of California. A lot of this, obviously, sheer volume of people that are in California already. So number 2 was Texas. Again, a very large state. You would only expect to have, a lot more home sales than, a Rhode Island, as an example. But number 1 came out to be Florida. So, I don't think it's a surprise to anybody that Florida has come out. And again, just keep in mind that this is through just the last 3 months. Okay. This is not a full picture yet, but for me as the investor, I want to see what's going on because I want to compare these 3 months, the slow time to last year where we were supposed to be at the height of everything of what happened last year. What kind of decreases are we seeing compared to last year? Because this is what leads us into a new year. So California from last year dropped 8.62%. So if we were up 16% last year and down 8% from that 16, we're still showing a good growth rate in general. So, don't always look at a negative number as something being bad yet, because we're still looking good. Texas showed a drop of 9%. And then Florida, as you can see, they're very similar, all three of them. And, not too far off as far as home sales compared to the previous year during these same months. Now, knowing that, hey, 2021, knowing now today, what a huge year that was. And in 2020 was a huge year. I remember, Bo, having a conversation with you. It was like 2020, where everybody was buying boats and jet skis and in everything. They were buying houses too, which
Oh yeah.
had shown more growth of home sales in 2020 than like the previous 5 years. And people were like shocked, like, why are people buying houses? And that
I
was
think
because
well,
of,
I think everybody was just also this remote working and moving around. I know a lot of people that went to work from home, and their companies are actually going to keep going that direction, even though they're coming back into the office now. They're going to keep a lot of people at home or allow them some of that flex time. So I think a lot of people are moving around. If I can go live in the sunny state of Florida where it's beautiful all year round and still work my job, why not?
oh, absolutely. I was even like talking to my insurance company and it was the representatives working at home.
Seems like every phone call or conference call I have these days, even with tech people or anybody, they're all at home. You
Yeah.
gotta say, hold on a minute, the baby's crying. Just a second, I'll be right back.
Hey,
Kind of
we're at
funny.
home.
Yeah, I'm at home.
So, I mean, so there you go. We do have an office and people do show up at an office, but we're at home today, so don't look at the negative number as necessarily a bad thing. Now, if I were to take those three states, okay, and actually look at home values, now just picking these three states, look at the home value. So the nationwide total for home values jumped up almost 17%. That's nationwide number here from 2020, right? So if I were to just take these three states, Texas came in at third at 18, which is over the national average, California at 20, and then Florida at 20, almost 24%. And that's taking home values. Now, what that tells me here as an investor is that obviously a lot of people were moving south. They were moving to better weather. Okay. California, not sure because you're just going to pay a ton of taxes, but that's what people do. The weather is obviously awesome there, but just the sheer volume of people there, you're going to have higher home sales, etc. But the home values piece to this is interesting because number one, it's telling me where that growth is right now. A big part of where Florida comes into play is because the sheer amount of demand. It was hard to find a property. People just started buying properties up, and now you have this underdeveloped, area where you have people from COVID. They're moving to Florida, nicer weather. They want to be south. They don't want to pay taxes, things of that nature. You just don't have the inventory. Again, Florida being that. Now, if we still see this increase, they're predicting about 11% increase. This is still going to be great places to invest, and it would just highly encourage. Now, we want you to understand your local market, right? So you may not be in one of these three states, nor we're looking at it from a state point of view. What's happening like in my local area, and I think that's extremely important. That's why I want to show you in REI Pro how you can analyze some of these numbers and really determine what's going on where you live. Now, the main section that I'm looking at is this top left in REI Pro. You're going to see these tabs of locations. You can add in multiple locations, take away locations once you go to your manage here. Now, I'm looking at Hendersonville, Tennessee. And what I wanted to do is just kind of pick a different areas of the country. just to kind of give you an idea, what I would encourage you guys to do is put in your location and really understand what's going on here. So if we look at, this is 62 home sales, last month, right? So then we look at the median home price and then the cost per square foot. So as you know, and we've already talked about, we already know that we're not going to meet the 2021 numbers. So, of course, some of these numbers are going to come down. And keep in mind, we're in the slowest months right now. Okay. But what's interesting, if you look at Hendersonville, Tennessee, is the cost per square foot's gone up. And you have to ask yourself, what does that really mean? Right. So that means each square foot of every single property has increased by, in this case, $14. Now, if I want to go look at the past 12 months of what has taken place here, you could start to see. Now, if I go here to the very end, and that would be the current or the previous month, and I scroll all the way back here to that March, so 93 versus 62, you can kind of see that slight dip. Now, we haven't got into really March yet, right? So if this number starts to climb, how do we know? Well, one good key point to understand how that is going to work is looking at our median home prices. You can start to see in this particular, there's that just slight. What you never want to see in a marketplace is where it spikes real hard. Because anywhere in real estate where these numbers just spike real hard, they typically spike down just as hard. You want to see this slow kind of growth to it. Now, if I go down to the bottom, or the medium price there, if I go down to the bottom, cost per square foot, you can see that slight increase as well. And even just looking at, February of this year has the highest cost per square foot. It's crazy, right? And a lot of this could come down to low inventory, price values are going up, as we can see, and so forth. Now, where does it go from here? And that's always the prediction. So we have to look at that. If we can increase by 11%, I'm only going to start to see this again kind of continue like we've seen here in 2021. There could be a low and a high and a low and a high, but it's not going to really drop off tremendously just because of the history shows us we're not going to just do that. They're not going to go to an 18% interest rate that's going to dramatically affect these numbers, if that makes sense. And especially now with all the new construction, things are going on, new apartment complexes that are being built. You're going to start to see some change in these numbers, but I don't think we're going to see a dramatic drop off. Now let's go over to California. I just chose Carlsbad here. Again, you're seeing that same kind of pattern with the home sales. And again, I would only expect these home sales to start to climb a little bit more based on the factors that we've talked about. You look at the median price here, just a couple of jumps here. It's kind of going up, down, up, down, up, down. That seems to be a pattern that will probably continue. And then you look at the cost per square foot sold. Again, where it's kind of spiked, it kind of flattened out, and then it's kind of stayed right where it is. So that could be a pretty consistent area moving into 2022. So what I encourage you guys to do is go into your area. And if I want to just go back to last month, I can kind of see those increases, decreases. I
So,
encourage you to go in, put your local market in there and start to see what has happened, in your market. If you start to see huge spikes that go like this, that's very unpredictable market.
well, since we're on this area statistics, I do have some questions coming in. I thought this would be a good kind of appropriate time to ask it and get it answered here. There, Brandon, thanks for the question. It says, "Hey, Chris, where is this data being pulled from? Is it coming from the MLS, Realist, etc.? How often is it updated?" Because I think that's kind of important so people understand where we're getting these statistics from.
Yeah, that would be
So,
good for you to answer, Bo.
be good for me to answer. Um, we obviously get a lot of data from a lot of places. We get them from the county recorder's office and things of that nature. But in this case, we are getting this from the MLSs all over the country, and we do get a feed. I believe it's a minimum of one time per day, if not two times per day, of all the home sales and activity that's going around. And that's in all 50 states. I think we cover about 95 to 98% of all the MLSs in the country.
Yeah, and that's a good point because you see a lot of stuff online right now where people are talking about, MLS data and how that, some people have it, some people don't have it, blah blah blah. Look, the county recorder is kind of the final sale, but depending on where you live, Bo, that county recorder may not update that for a week or two.
Right.
Whereas in the MLS, we can get that a lot faster, which obviously we want that data much faster because we got to make a decision today. If I'm making an offer on a property today, I need to understand today, right now.
We all know that well over 80% of the houses are sold on the MLS anyway. So we're pulling
Big
that
number.
data virtually live on a daily basis coming in. That's 7 days a week, actually, as this is fed to us.
Some of these strategies now, how do these strategies, what are going to be the best strategies? And again, this is all going to be dependent on where you live, and that's why I really encourage you guys to get in there and understand what has taken place statistically in your area so you can determine what strategy may fit better. These four strategies are going to work no matter what. It just, some strategies may be more favorable based on your local market conditions, and I think that's a key point, and that's what I want to talk about and share with you is just some of these points to look at. Now, wholesaling is that business where we're going to go find, that distressed property. Typically, it's distressed, but we're going to get in at a good price. We're going to pass that deal on to a rehabber or a retailer, somebody that's going to fix up that property and either sell that property off, do something else with it, rent it, and so forth. So it's kind of that middleman of the deal, and this is still going to continue to do well in a lot of areas. And again, you want to check your local state laws depending on this particular strategy. The majority of states you're fine with, but in general, what types of neighborhoods are we looking at? Number one, we're looking at the middle to lower price market. So as an example, if you lived in Rancho Santa Fe, California, there is no low market. Find where these middle to lower priced markets are going to be. And that's where your general wholesaling deals are going to happen. Home sales. How do home sales factor in with wholesaling? To me, it really doesn't because number one, general home sales are going to people that actually live in the house. Now, obviously, a rehabber has to buy a house. That's a home sale in order to fix it up and sell it, which then would be another home sale, right? But generally speaking, wholesalers are selling these properties to what we call investors. So investors are not going to buy properties that aren't financially rewarding. And depending on the type of investor, what they want to do with it is solely up to that particular investor. The wholesaler really doesn't care what they do as long as they just buy the property. So again, wholesalers need to find a great deal and then pass it on. Now we talk about, I think people, maybe this is just me, but this is what I see. People think, but the market where I live has, multiple offers and it's crazy. But still, there's going to be those markets, again, focusing on middle to lower price markets. You're still going to have people that have problems. You're still going to have situations where general wholesalers don't buy properties from properties that are listed for sale, such as the MLS. Wholesalers generally find properties that are not listed for sale. Now, you can still wholesale properties that are listed for sale, and that's not what I'm saying. But generally speaking, these are not advertised properties. This is that vacant property, abandoned property. It's somebody that has some situation that is maybe in financial ruins. They can't afford to fix it up. And maybe the county has labeled it abandoned and multiple different reasons. And that's where we really want to focus on as a wholesaler. Now, as far as the housing demand, this could really be across the board. So even if there's not a high demand for first-time home buyers and home sales, it's irrelevant because wholesaling is still going to sell it. Your wholesaler's still going to sell a property to an investor that's looking to make a financial gain from it, a profit from it. It doesn't matter if the market is, oh my gosh, there's so much inventory. Well, if there's a lot of inventory, you're going to have a lot of investors buy the property and probably rent them out. Okay, so that demand really is not too relevant to this particular strategy. Could play into factor in some areas, but overall, I wouldn't worry about it. As far as the risk to the investor, this is going to be very low risk since you're not owning the property ever, you're just assigning this property over. Those of you that may be buying these properties and then turning around and selling them to rehabbers obviously would have more risk, just a simple fact that you bought a property. Your buyers are investors, and special situations, I'm going to just label one, are these abandoned properties and vacant properties, or properties that have been deemed abandoned by the local city, county. These are areas that I really want to focus in, that you're really going to do well in when you're wholesaling. So definitely want to check your marketplace and say, hey, number one, are there middle to lower priced neighborhoods here where there may be a lot of distressed properties? If there are, that's great, right? So, and sometimes these aren't always obvious. You might have to drive through the neighborhoods. Obviously, you can pull up vacant leads through REI Pro as well, to really understand why a property is sitting vacant. Because think about it, if you have a vacant property, someone could be paying a mortgage on it. Somebody must be paying taxes on it. Somebody could get hurt on the property. Somebody could vandalize the property. There's a lot of things that go wrong. Why is it just sitting there vacant? It might be a good motivation for the owner to sell. So there's just key points to look for when you are wholesaling. Now, as far as rehabbing, rehabbers don't necessarily need a wholesaler, but a lot of rehabbers use wholesalers just from a time sake point of view. The rehabber doesn't have time to sit out there and pound the streets, talk to sellers, and try to formulate a good deal. Whereas some rehabbers, they do that. So again, I like the middle price market, and this is where the majority of your buyers and tenants are going to come from. So no matter if you're a rehabber that buys, fix up, and sells, or if you're a rehabber buys and rents, or maybe you lease option or seller finance it out, that middle price market is really going to be ideal. And again, this is going to pretty much be in most areas of the country. Home sales, ultimately the best time to buy a rehab property is at the beginning of an increase. And what I mean by that is, people always say, you need to buy in a down market because eventually it's going to come up. And that's where you're going to see that appreciation. What most people do is they buy at the peak of the market as an investment. So they pay high at the peak, but at some point, is it going to continually go higher? Is it going to drop off at some point? And so ideally, this is going to be great at the beginning. Now, from what we're being told and what we're seeing out there, this strategy right here is going to be key in the next 6 months. Okay. So again, you're going to have a lot of new construction being built, things of that nature in a lot of areas. And keep in mind, don't necessarily look at the people that just live in your area, because a lot of people are moving all the time. And especially now with COVID and things that we talked about, they're coming in. It's like, where are these people coming from? We even ask ourselves that, like, where are they coming from? There's no big Amazon here. Why are people moving here? So it's going to continually happen. Housing demand could be low and high. So when I look at demand, you think about, if demand is high, typically prices are high. But if you find a good deal, keep that in mind, it has to be financially a good deal, and the demand is high, you're going to sell it quickly, period. If the demand is low, you're still always going to have people buy. So, rehabbing houses is always going to work well, no matter if the demand is high or low. I would say the investor risk, I call it medium, because you do have to buy it, you do have to manage contractors, and you have to sit on the property until it sells. So to me, that risk point of view could be, I would say, medium. Now, if you're buying at the peak of the market, paying full price, which some investors do, that risk would be extremely high. Okay. So as you can see, if you're buying that property at the peak, it's going to be very difficult. It's going to take years to recuperate any kind of investment. Now, that could be a very smart choice for areas that you foresee growth in. Like, hey, they're like Amazon or Tesla just put, a big building there in Austin, Texas. You foresee the growth where it could potentially even increase, have long-term value, versus more of the investor that has that short-term value in mind. Buyers, obviously, just home buyers, could be tenants, depending on what your exit strategy is. One great thing here with rehabbing houses is you have multiple ways to get rid of it. If you fix up the house, your intention is to sell it. What happens if you can't sell it? What could you do? Well, I could rent it. Okay. If you don't want to rent it, maybe I could lease option it, or maybe I could sell or finance. So it does bring in multiple exit strategies. And again, I keep this risk at a medium because of that. But just keep that in mind. Special situations, as we've talked about, rents have increased. So if you are that investor that's looking to buy property and rent it out, this is going to be a great year for you to do that. I can tell you, one of my personal coaching students, this is what he does. He buys as many properties as can, he just rents. Okay. Where, I work with a lot of investors where, hey, Chris, I need money today. Okay. So every investor is going to be different, but if you're looking for rental properties, this is going to be a good time to do it.
Just talking about the demand and rehab, and some of the things in the data that I'm seeing is, these foreclosure forbearances or moratoriums are expiring, and we are seeing an uptick in these auction dates and stuff of that nature. So that could be a good time to jump in on that side of the business as well.
Yep. All right. So let me just open that whole screen. Let's talk about lease options. One of my favorite strategies, but I'm going to give you the ideal situation. Number one. So type of neighborhoods, again, middle price markets. You don't really want to be in the war zones because generally people are not going to be able to qualify for bank loans. Okay. So that's going to be more rental properties in those neighborhoods. So again, middle price markets are going to work well. Again, you could go high here as well. What you have to battle, and people ask me this question, how do you know when it's too expensive to do a lease option? And here's my general rule of thumb. And I'm going to go extreme here just to get the point. If you're looking to lease option a $5 million house and the mortgage payment is $20,000 a month, but the rental value is only $15,000 a month, the seller would lose $5,000 a month doing the deal, as an example. Okay. So with lease options, we have to go on the rental rate, not necessarily, hey, we're just going to pay whatever the mortgage payment is. Whereas a seller finance, you would be paying whatever that monthly payment is. So generally speaking, middle price markets, these are going to be nice homes in nice areas. They're not distressed properties, maybe just a little bit of TLC, but they're livable. People can move into them tomorrow. Home sales, ultimately, when you see a decrease in home sales, that's where you start to see more properties, more owner motivation, where if they can't, home sales has gone down, maybe inventory levels start to pick up. They need to sell, but they can't sell. And typically a average owner is going to say, if I can't sell, I'm going to rent. Well, that's where a lease option really comes into play. So if you're in a market where you're starting to see more, maybe that tick down, you're going to start to see inventory come up and owner motivation go up at the same time. And that's because of just low demand typically. Investor risk, I always say it's pretty low because you don't own the property. You're really controlling the property, which I like. Buyers are people that can't go to the bank and qualify for a traditional loan. Now, that could be for various reasons. Obviously, we want to put buyers in that are close to getting qualified, but you have doctors and high salary position people that can't qualify for a bank loan, but financially they can afford it. So that would be a buyer. Special situations. Think about these tired landlords. We're talking about, Bo, earlier, this whole moratorium that has ended. We are hearing tons of information out there about how frustrated these owners are because they just went through a long period of time not getting rents. They're not going to go back and sue and try. It's not going to get the money. And court systems are so backed up that they're just kind of tired of the business. And this could be the individual, Bo, that says, 3 years ago, hey, I'm going to get into real estate and I'm going to rent the house out. And I want to, diversify, my investments. And then all of a sudden, bam, they
Nobody's
go through
paying them.
this. This could be a first time investor that gets into it. and so forth. And you have to, obviously the numbers have to make sense in real estate anytime you buy and do these things. And that's why I love our calculations and REI Pro and how we can analyze these particular deals. But you're going to see these tired landlords. It's going to be set up a great lease option right here. So keep that in mind. All right, so let's go to seller financing. Let me just go ahead and display all those neighborhoods. You could be low to high price markets. You don't have to be. Again, I do stay away from war zones. Home sales really aren't a factor because seller financing is one of those strategies that you really are focused on a buyer that can't qualify. And a buyer that can't qualify can't buy in a great market and they can't buy in a bad market because they can't qualify. Where the owner now is financing the property, this opens up a whole new buyer pool for people and is a great strategy where you become the bank ultimately, right? So you could seller finance it from the owner and turn around and seller finance it. You could purchase the property and seller finance it. Okay, so a lot of different things that you could do with this particular strategy. Housing demand, I always say low, just because more inventory, you have more motivated sellers, more open to this particular strategy. Investor risk, again, go back to medium, just like rehabbing, because you do own it. This isn't like a contract for deed type of situation. We don't do seller financing. That way, when we buy properties, I want the deed when I get it. Types of buyers, again, these are going to be the people that can't qualify for that traditional loan. Special situations really favors all market conditions. And what I mean by that, the economy has nothing to do with this. The housing market, the demand, home sales, it's irrelevant because you're always going to find people that can't sell and can't buy. And that's where this particular strategy, again, one of the most profitable strategies in real estate. Now, seller finance that goes along with a lot of things, such as situations. And that's what I really want to talk about. So these four strategies are going to be ideal this year. Now, I'm not talking about exit strategies. Exit strategies would be, I could rent the property out. We've talked about that, this is going to be a good time to do that. We've talked about the next 6 months. If you want to rehab and sell, it's going to be a good time to do that. Okay. Just simple fact is low inventory. You find a property, fix it up, you're going to sell it because of the demand. It's common sense there. But what I really want everybody to focus on is going to keep you in the game for a long time is to understand what I call situations. At the end of the day, this is what you're looking for. And this isn't everything. These are just some of them. Number one is pre-foreclosure. Obviously, we've had that moratorium on pre-foreclosures for quite some time, it seems. That's been lifted. But this is a situation that somebody's going to go through. Now, the strategy that you would generally work with this particular situation is seller financing. You could technically buy it straight out as well, but seller finance is going to be that strategy that you're going to work in this particular situation most of the time. From my understanding, Bo, is that these are going to start to tick up this year.
Yep. And also I'm seeing it in the daily data. Matter of fact, somebody was asking about this, is our information being updated? How often for these list of types of properties like a pre-foreclosure and our lead search? Yes, this is updated Monday through Friday. So, this is as up to date as you're going to get it anywhere.
Yeah, and we're pretty proud that we have the best data company when it comes to foreclosure data. And every data company will tell you that. That's the funny part. Divorce, tax liens, your health, right? I mean, obviously, that's been a huge factor with COVID over the last couple years. Lost a job, another big one. Low on cash, you just need money. Inherited property, job transfer, started a new business. A lot of times you become that entrepreneur. And I can tell you, one of my students, Bobby, quit his job doing real estate full time, started during the pandemic. He is absolutely killing it. But one thing he's recognized is that, banks just don't loan you money if you haven't been in business for a few years, right? So you have to be creative.
Speaking of Bobby, I see Bobby is on. Hey, Bobby.
You got to be creative sometimes. And, he's building those relationships and doing the things that he needs to do to set him up for huge success as we move forward. But simple fact is, you started a new business, and a lot of people started a new business during this COVID time. Credit issues, people that tired landlords, maybe families that are downsizing, upsizing, just family issues in general, and obviously inflation could have some impact to this. And I probably should have put gas prices on here because that's obviously the big talk right now. But that's going to all come hand in hand. Again, another reason why we need to be in this business. I don't care if you're the investor that says, Chris, I need to make an extra 5 grand a month, or if you're the person that's, look, I want to do this full time. And real estate is always going to be there. And as I said before, they don't make any more land. And that's the one thing I think from my point of view, and especially being in the business for so long, is understanding these waves that I call it. So it's highs and lows and how the market shifts from a buyer's market to a seller's market. The one thing that it tells me is that it doesn't say I should be in real estate. Oh, now I should jump out of real estate. That's nonsense. What it tells me is, how do I shift gears? How do I change strategy during these moments of time and understand that? And the only way that we could do this is to really understand the statistics, what has taken place. And, I want to say guess, but we're kind of guessing here of what to do, when to transition. If you go back to, 2005, where it was like the peak of the market. I started selling all of our properties off in 2003 because I thought 2003 was going to be the peak of the market. And I failed to realize that the market almost doubled between 2 years. So, I'm like, man,
Mm.
I should have sold those properties. I would have made so much more money. But I would rather have done it than to have bought in '05. And still today, people are still paying for those properties that they bought. You can't go buy a property. It's funny, you just have general conversation. You can't go buy a property. Let's say that you overpaid for it, or maybe you didn't know that you were overpaying for it until the following year to realize that the market went down and you overpaid for it. You can't go to the bank and say, well, it's not worth it anymore. You can have it back. It doesn't work that way, right? Life doesn't work that way. And hey, here's the good thing, Bo, is understanding these alternate strategies, these creative financing strategies when you're in a situation like that. It's having multiple ways to get in and get out of a deal.
Mhm.
And when you limit yourself as an investor, like the investor that only knows one way to do something, if it doesn't go perfect all the time, that's where they get into trouble and that's where they make mistakes. But understanding these multiple ways and strategies is really going to help you. And I think that's what's helped me over the course of time, is learning how to transition. Okay, we need to sell off. And now we need to be in the creative financing. Now we need to get out of the creative financing, start buying again. And it's this wave of things that we go through.
Nobody's actually asked this question real quick, Chris, but I wrote it down because I hear it asked a lot of times. You were
Okay.
talking about in the lease option, the seller finance, um, the buyer that we're targeting is somebody who can't go and get qualified traditionally through the bank. So why would we target those people if they can't qualify from the bank? What's my risk? If I'm trying to put them in one of our properties, but they can't qualify. And I know we do it all the
Right.
time. And I can see somebody new going, well, I don't want to, rent to somebody who can't qualify or try to sell to somebody who can't buy it anyway. So why would I do that?
Yeah. So just in general, those people that can't qualify is really being based on something that has happened in the past that has either dinged their credit or a loss of job or something of that nature. It doesn't mean that they haven't rebounded from that, right? So we want to look at, somebody that has some job stability, somebody that is close to getting qualified. Now, owner finance, seller finance could be a different situation, or you could literally do it for 30 years. I could seller finance it to somebody for 30 years. So just because they can't qualify, and I don't want people to put like a bad label on these people, like they're bad people, stay away from those people because they can't qualify for a traditional bank loan. Look, we all have problems, we all go through
Mm.
problems, we've all been through things that have affected. And even a small business owner, Bo, it's hard to get financing if you're a new business owner. So it doesn't necessarily have maybe something negative that has happened to you in the past, but it could
Well,
be something positive that you're trying to do. You're trying to, take care of your family. You want to build a legacy. You want to make more income. You love real estate in general. And unfortunately, the banking system does not agree with your philosophy because you haven't been in business, and
well,
it shouldn't change
speaking
who
of
you
that,
are.
I mean, 2020, 2021 for the small business person, they really tightened it up because a lot of people got hurt. And they're like, well, I don't know if I want to loan to somebody who's self-employed because, they may go under next month. So yeah, that's a good point there.
Yeah, and it's always been a battle. Even when I got started doing it full time, I'd be like, hey, I make all this money, but the bank says, yeah, but we don't know who you are. It's like, okay. But it's part of the game. But don't label people as bad people or they would work out. I think, you got to use common sense. You got to meet the people. You got to understand who they are, what their situation is, why is their credit where it's at. Now, with a lease option, their credit needs to be close. That's why we would want to get them with a mortgage broker, give them a roadmap of what they need to do over the next year to actually get qualified. Where a seller finance, you could seller finance it for a long period of time. So it's still a great strategy, but I think people kind of label people, well, if you can't qualify, you're not a good person.
Well, sometimes moving
You
into an
know?
area, you might want to do a lease option. You like the house, but you just want to make sure that the market conditions are good. So you're going to get into a lease option with the right to purchase it. You don't want to move twice, but you don't have to. Then
Yeah,
you can do something different. So it
use
just
it.
depends on the person's situation. So we have a question from Hal. It says, "Do you know what percentage of persons that are in foreclosure today might be filing for bankruptcy to prevent losing their house?"
Nobody would know that.
Yeah, I don't know the. I don't.
That's kind of that's what the homeowner and what they're thinking, of okay, I'm gonna go see an attorney. There's no way to actually gauge that. Unfortunately, we just can't see in the minds
Right.
of these people. But
All right, let's see. Brandon, is there a location where that you can find linked properties to identify investors to build relationships with in the event of offloading and or adding to a buyer's list?
yeah, one of the best places, I wouldn't say it's a link, but when you join any kind of local RIA group, um, that's where you're going to find those investors. I me, I'm a little bit different. Bo knows this. Like I'm the different kind of person. I was always the person. I'm going to go find a good deal, and because it's a good deal, I never thought I'd have a problem selling it. Number one. So what I did in my very first deal is I found this distressed property, didn't even know what I was doing, filled out the contract wrong. I mean, nothing went right. And I put a little ad in the paper because that's what you did back in the day, right? And I had several investors call about the property, and I took their information down because I knew there would only be one buyer. So if I found another property, I would just call those particular buyers because I knew they were interested in buying a property from me. And that's how I built my list. Obviously, you could go into REI Pro. We do have people that would be perceived as being more of the investor side of things that buy property in your particular area. And you could do a postcard mailing to those individuals and start building your buyers list that way as well.
Rodney, does REI Pro walk me through steps to take with pursuing pre foreclosures or tax liens? For instance, what if I want a door knock?
Okay, there's a lot of moving parts to that question. Hold on.
Yeah, because there is some step by step stuff, but we don't step by step you through door knocking. So,
Yeah, so let's start with the pre-foreclosure piece to it. Pre-foreclosures, number one, is not a strategy. It's a situation that somebody goes through. So the strategy, like I talked about, would be seller financing. So, one big thing, one of the very first things we put in the REI Pro was our 10 executable steps. This is following this, what are the physical things you have to do in a specific order to close a deal? And we put that in there because we realized that so many people have no idea what to do next. Now, if you take those executable steps in combination with our complete training series that y'all have access to in REI Pro for free, to understand the strategy and those particular things, then yes, you're going to be able to walk through an entire deal. And it doesn't have to be just a pre foreclosure. A specific tax lien is, again, is a situation, not necessarily a strategy. Any of those strategies is going to help walk you through that process, which has been one of our number one, testimonials that we get. I couldn't tell you thousands and thousands of testimonials on the simple fact that if you're getting into real estate, you don't know what to do next. You can learn different pieces of the business, but how do you connect the dots to it? And that's what we've been able to do in REI Pro. So once I save a property to REI Pro that I want to work or investigate, I can then go to those particular steps. Step one says do this. Step two says do that. Step three, all the way down to getting paid. So in combination with specific situations like a pre-foreclosure, that's where the training series, so we understand how to work that. What questions specifically do we ask? What information do we need to get from the homeowner to make an intelligent decision here? So, in combination, that's why you can't do one without the other. So, if you don't understand it, it's never going to work. And if you don't have the tool, the steps and the process, it's not going to work. So, it's kind of like why we have to have both. And that's why we have them in there.